All right. Hey. Welcome to the Real Estate Rundown. I'm Dustin DeHart with Keller Mortgage, and
I'm Nick Lehman with the Lehman Group at KW.
Great to see you guys. Happy to be here today.
Yeah,
Nick,
Happy New Year.
Happy New Year. Yeah, it's been a while. I haven't seen you in 2 weeks.
It's been a whole year, right?
I know. So we got a great show today. You know, it is the beginning of a new year. So I think it's in order that we do a little recap on what happened last year, right? In the real estate and mortgage industry, maybe some predictions on what we think are going to happen this year as well. And then in the rundown, we've got some great topics, right? You know, the basics of income. It's tax season, so if you're self-employed, we want to get you prepped to go buy a house and game plan to buy. And believe it or not, Nick, there's a best time to sell. I didn't know that.
There is, yeah. We'll talk about that definitely in the rundown. And then we thought we'd finish the show up with like things that we don't want to go away.
Right, because last time we did things that we want to go away this year. And that was a lot easier to compile that list than things we don't want to go away.
It's true.
So we'll hit that at the end, my friend. Good to see you. Again, it's been 2 weeks. I know we took last week off because of, the holidays and some scheduling conflicts. But I trust that you had a great Christmas and great New Year's.
Yeah, it was awesome. Spent time with the family, did our thing. New Year's, had the opportunity to go to an awesome party at the Cosmopolitan.
I saw the pictures.
Yeah,
we should have brought some of those in.
Yeah, definitely. Yes, it was epic, and for sure, had a really good time. How about you?
Mine was really mellow, really quiet, and uneventful, and exactly what I wanted.
Were you asleep prior to the countdown, or you did East Coast?
No, I always do an East Coast, but I stay up till about 11, which is really late for me.
Wow.
Yes, but it was amazing because I got refreshed. It was really slow last week. So I took most of the day off Friday and spent 3 days just kind of recouping and recharging for this year. Man, I'm ready to go.
Nice. Did anybody work? It felt like nobody worked from Christmas till at least.
It was slower than normal, right? But Tuesday I came into we're back.
It's
back
full speed ahead.
Yep.
Full speed ahead for sure.
Yeah, great. So it is the New Year's. Are you a New Year's resolution guy?
I am. I mean, I think I like to go with the masses, and then I'll jump on to, pop culture. So, I got a New Year's. I'm really doing, I figured out my values factors. I'm reading this book right now, so I'm reading. That's one of the things I'm picking up to try to do more. But my values factors, I've learned that the 4 things that I have to do, one of these 4 things at all time.
Okay.
It is to make a memory, laugh, have good food, or, teach something. Those are kind of the things that I do. So I'm either going to...
Yeah. You're a better man than me. We've already figured that out. So,
What about you? You got a resolution going?
First of all, Tuesday and today, the gym is, you can't even find a parking spot. And when you go to the gym every single day at the same time, it's always the same familiar faces. And there's a lot of unfamiliar faces in there, but they go away in about 3 weeks. You know what I mean? I've never been a big New Year's resolution guy. However, this year, I have started to meditate again.
Wow.
About 5 years ago, I took a course in transcendental meditation. I'm sure it was great. Honestly, I loved it. Kind of was changing my life. And it's weird how, something's good for you, right? But your brain's like, don't do it, Let's watch football, have a drink, and eat some bad food instead, right? But... what's great about, first of all, a little time consuming because it's in the morning for 20 minutes and when you get off work for 20 minutes, right? So it is,
that's
where
commitment.
It is a little bit of commitment, but when you get back in the saddle, it also helps a lot of other things that knock off, your New Year's resolution, right?
It's true. Kind of things are connected. So if you can start your day with 20 minutes of meditation, I imagine it's setting you up.
It gets rid of some stress. And when you're less stressed, well, let's see on this list, less alcohol. That's certainly one I'd like to see. When you do less alcohol, it's your diet's better, your finances are better, your mental health is better, you improve work-life balance. And the list goes on and on. One of these lists we have here, and we'll pop this up later, is making time for a hobby, right? So I started that 2 weeks ago, and I actually stopped. I was growing my hair back. and seeing how that follicle journey would go.
Yeah.
And it looked like I was growing a chia pet. Do you ever see one of those?
A little patchy, or
it was weird, and I'm like, we already made fun of my lip last show, so I figured,
we don't want to create a pattern of
I
always
did want to
picking
go
on
like
ya.
3 or 4 weeks, and we could like see how that journey
That
was
would be
going. But
exciting.
I've already screwed up one of my resolutions.
Okay.
So, anyways, enough of my hair challenge and my lip. See, I still got a little thing going there. It's weird. All right, so, well, the end of the year, the beginning of a new year. I'm excited about it. So I figured we should kind of recap the real estate market.
Yeah.
What happened last year, right?
Absolutely. Yeah, let's pull up the slide. I think this will be really interesting for people to see. So as you can see, January 2022, we had an average median price of $435,000. Now the LVR numbers have not come out yet for December, but if you look at the bottom there, the median price for November that came out was basically $431,000. So here we've had this narrative or these stories that everybody's hearing of this recession and crash. But if you zoom out slightly and you take into consideration a 12-month cycle, we ended essentially 1% down from where we were. Now, again, December numbers have not come out. I anticipate, I've heard whispers that it's going to be very similar.
Yeah.
So essentially 4,000 down or 1% down.
Yeah.
Now, that is not the story that has been out there.
Right.
So I thought that was interesting and something that people, again, as you zoom out, it's not as negative or, the sky is falling as people or the media wants to tell you. So interest rates, I would imagine for you.
Yeah, but really quick, the numbers that point out to me on there, if we can go back to that slide, sorry, was the amount of homes available, right? Was at 1821, now to 7,342. But the really big one is look at the sales. 2560, which is normal, right?
Yeah.
Always 25, 3,000 is an amazing month.
For sure.
And we've dipped it in that 1,500 range. So we certainly want to see those improve.
What I think you'll see, we'll get into the predictions here in a second, but what is important, that it's a good thing that you pointed that out, is we didn't go to the 6-month cycle. So really we had a 20%, 14%, somewhere between 14 and 20% gain all the way to June.
Right.
And then we came back down. And what caused that is the inventory that you're mentioning, which is what caused.
Which went up rapidly in like 3 months. It went nuts, right? It's starting to level out, which is good. So interest rates, well, there you go. We're in that low mid 6% range right now, which, doesn't sound great. But if you look back at the 80s.
Yeah, see the zoom out effect again. You zoom
look
out.
at that, and if you look at that graph, we're in it's in a low rate environment, believe it or not, so we certainly want to see rates go lower, but the good thing is it looks and appears as if the damage has been done, right? We're not, the naysayers of we're going to 9 or 10% rates are not chirping so much right now. It is fluid, things change, but look, that's 6% is a lot better than 7.5%, which was not that long ago, and was almost reaching 8%. So, rates are heading in the right direction, and let's hope that they keep coming down. So
absolutely.
That out, right?
It's funny how everything tastes better on the way down versus on the way up. Interesting.
Absolutely.
How that's transpired.
All right. So our predictions are kind of like opinions. They're and a-holes. Everybody's got one of them, right? So
I've heard that.
Our predictions are our predictions, right?
Yeah.
And we're it's our podcast. We're going to change them.
That's right.
Right. So where are you seeing the housing market?
So honestly, I'm just going to speak locally. I think here locally we will see a plus 2% gain. That's my prediction. That's what I'm throwing out there. I'll even jump into your world a little bit. I think we'll be within the next 12 months. I think we'll be like 5.5 on the rate.
Okay. Good.
Okay. Where are you at price wise?
So you think by the end of the year we're pretty much flat?
Pretty much flat. Yeah.
Okay.
Yeah.
I agree. I think we've got some more damage to be done, right?
Okay.
Like I think we're going down a little more, right? And then things will start to pick up, and when they normally do, right, in the summer months, and then we'll slow down and again to the end of the year. And I think when it all washes out, we're going to look and go, man, and we're up or down, not that much, right? And it's kind of flat, which is just what we should see, right?
No, exactly.
And then heading towards that 4% every
Right.
single year.
Exactly right.
Which seems to always happen. It's weird. So, yeah, interest rates. So today the Fed spoke, which is never good for interest
Okay.
rates.
Yeah, I missed this. What did they say?
They were hawkish again and not
Okay.
dovish. So
Okay.
they're not in line to really start changing monetary policy right away.
Okay.
So they're going to continue with rate hikes, which, again, that helped mortgage rates prior to this. But now we really like to see them take the foot off the pedal and admit like inflation's coming down,
Sure.
right? But they want to see a little more pain in the market. They really want to get this inflation under control. So, and it looks like inflation is tamed, right?
Yeah.
And we're going to see some more good numbers come out in the forthcoming months. Things like 2 weeks ago, there was a huge $1.9 trillion spending bill. The government just can't help themselves, right?
Yeah. So
that's never good for inflation. So
for the rates.
yeah, so the last couple of weeks, rates have been a little wonky, right?
Okay.
But even today, that could have really hurt interest rates.
Sure.
And it didn't. I mean, it didn't improve much, but I'll take it.
Yeah.
We got to take it day by day. And yeah, I think going into the end of first quarter of this year,
Okay.
we're going to really start to see that 5% range. And I'm one of the few that think by the end of the year, we hopefully will be tipping our toe in those 4% range.
Wow.
Yeah, so-
Okay, so to recap that, I'm feeling we're going to be mid fives. You're saying low fours.
No, high fours.
High fours.
At
I'm
the end of the
sorry.
year.
I
Yeah,
misspoke.
yeah.
High fours end of the year, and then median price. We're both agreeing that it's
Yeah,
semi-flat.
I totally agree with you.
Okay.
Yeah. So
Okay.
and then we'll see what happens in February when we completely change all of these predictions. But yeah, look, I think it's going to be a back to normal year, right?
Sure.
But normal.
what
the new
normal was
Right.
years ago that people
Sure.
forgot.
Even normal with interest rates is now the new normal,
yeah,
right?
right.
We don't have quantitative easing with the Federal Reserve, pushing rates artificially low for us anymore.
Sure.
Now that could all change, right? There could be another COVID. I'm not wishing
No,
that.
let's not put that
but
in
look,
the
it looks
universe
like we're
at
heading
all.
into a slight recession, which is normally good for interest
Sure.
rates. And believe it or not,
It's really good for real estate.
yeah, it's normally
always
not
is.
bad for a housing market
No.
either. So it's again, it's I think the damage has been done. Let's get into this year, let's figure it out. Let's get rates lower, get buyers out of hibernation. And I think going into next year, we're going to really see things start to improve.
For sure. I think
Right.
that consistency will kick in, and that will give consumer confidence that, hey, this is a good time, or it is, we're in a spot that we can make a move. That consistency is key to give consumer confidence, for sure.
Yeah, what I hope also doesn't happen is the hedge funds and these investors come in once they get to a certain price and buyers start coming back in and gobbling up properties. But that seems like it's almost a foregone conclusion that they're just
kind of TBD. We'll
Yeah.
we'll see. I think that it'll be interesting to see where it plays out.
And with new home sales as well. I know they're dropping prices and giving huge concessions
Incentives
for
galore.
buyers.
Yeah.
I think again, not to beat a dead horse, but when things start to normalize soon, a lot of those opportunities are going to go away.
For sure.
Right? So,
Absolutely.
All right. So it is almost rundown time. I know we explain what it is.
Sure.
Because, it is a fairly new show, if you wouldn't mind.
Yeah. So the rundown, Dustin and I are going to go in kind of hot potato, 2-minute topics, both in real estate, related to real estate and pop culture. Let's go ahead and start the clock. And Dustin, it's to you. DTI.
Yeah, and I actually can see the rundown today. Like last week, or 2 weeks ago, we had a really small screen. So DTI. Everybody's favorite topic, right?
I love it. What does it stand for?
It actually stands for debt-to-income
Okay.
ratio, and
Okay.
it really is one of the most important things that can make or break a loan. And it really is. Your credit score is your credit score, right?
Sure.
We can improve it. It may take time, right? Assets, you either have the money in the bank or you don't, right? There could be large deposits, but we can usually get around those. There's always a way to skin that cat. But debt-to-income ratio, it's pretty simple. You take the Pythagorean theorem divided by the Fibonacci sequence. No, just kidding. It's real simple. It's a front end and a back end ratio is what we're looking for, right?
Okay.
So what we do is we figure out what your income is, right? Let's say you make 10 grand a month, right? And now your housing payment's going to be $3,000 a month.
Okay.
Your front end ratio, your housing ratio is 30%, right? Which is pretty good. And then we're also going to now factor in for your back end, the most important ratio, all of your liabilities, right? Car payments, student loans, credit cards, if you have child support, stuff like that. We're not going to hit you for cell phone bills, even though that is kind of a must nowadays. But, and then let's say now those payments add up to $1,000 a month, right? Now we're at 40%, which is, that's about where we want to see you. Anything over 50% is, alarm bells start ringing.
Sure.
There's certain products that can go above that. But look, that's where deals die. Normally,
Okay.
90% of the time, where the underwriter's not agreeing with our income, right? Or maybe some new debts have popped up that we didn't see or undisclosed, and that's how normally files go rest in peace. Put it
Right
that way.
there.
Yeah. So, all right. So, best time to sell. This looks interesting.
Yeah. So, believe it or not, if you're going to be in a flat market, which we both agree and predict that could happen, there is a better time to sell versus what time of year and what your expectations would be. So, have a chart, pulled it from the advisory. Check this out. So, the best time to sell, the single best month is actually March. And what that would mean is you would need to start interviewing your listing agent or the agent you're going to hire to list your home, which, I'm right here. You would want to start that in about end of January, mid-January to February to prepare your home for the best strategy to get on market by March. Some fun facts, the shortest amount of time that will sell will be February to March.
Okay.
The actual most profitable time is May to June. So you'll sell it for the highest dollar amount. But again, sometimes in certain cases, time is money.
Is
so
that
if you need
because
to.
More buyers?
Correct.
Usually? Okay.
That is exactly right. So
Right.
more buyers are in the market
Sure.
At that time in the May to June time of year versus the February, March. But again, shortest days on market is February, March. So maybe you have a scenario where you got a job opportunity or you need to reload quickly. I need to sell within X amount of time. That's the best time. Best month is March. We are seeing the days on market creep up 47, 48 days now, which means you'll actually sell in May. So the math actually does connect. Listing in March, highest dollar amount in May. Should you miss those boats? You're going to suffer slightly, but not too much in a flat market. Fun fact I also pulled from this, according to Realtor.com, the best day of the week to list your home is on a Wednesday. And
Why
that
is
has
that?
changed from a Thursday.
Okay.
And so a lot of listing agents and their strategies, they're doing this exclusive, hey, we're going to list the home. You can't see it till the Friday. So 2 days of that marketing and that exclusivity.
Interesting.
Yeah,
Okay.
super
There you
interesting.
go. All right.
Yeah.
So
Tax returns, buddy.
March and Wednesday. That's
March and
you're gonna
Wednesday.
have like
Wednesdays and
25
March.
listings, dude.
I'm hopeful.
All right.
I'm hopeful.
All right. So tax returns. All right. So every year about this time, I try to meet with a lot of people that I've talked to in the beginning of of the prior year that maybe were self-employed, right? And they had some struggles qualifying because when you're self-employed, we need to get your tax returns and figure out what your net income is, right? After all those write-offs, and people have really good CPAs nowadays, right? So
like magicians,
right? And for instance, I met with a colleague of mine. He's a new real estate agent, young kid. He's kicking ass already, and 2022, he made like $5,000. That was it, right? Had a really good year this year. And I told him you need to claim this amount of money to buy this amount of house, right? And then pay taxes on that money, right? Now, there are times where you can get in IRS payment plans if you don't have all of that money to put down. But yeah, it's certainly something that every year I'm meeting with a lot of clients, getting them prepped and ready to go. And we don't always have to take into account 2 years of tax returns. Depending on how long you've owned the business and what our findings are through an automated underwriting system, we may only need 1 year, right? So
Okay.
you got to bite the bullet 1 year, maybe, right?
Right.
I'm a W-2 employee, so I don't feel so bad that you guys have to pay taxes once a year to buy a house. But you know, look, it's you know, it comes down to dollars and cents, right? Is me showing this amount and paying taxes on it worth getting a house? And it ultimately
answer is
comes
yes.
down to you. Yeah,
Absolutely.
And the answer is yes. All right, 2023.
Yeah, 2023. So 2023, I've been hearing this saying, 2023 is the year of me, the year of self-care. You know, they try to make it cute and rhyme. Like, and so I found an interesting article and stat. We've already used it today just in our own journey of discussing resolutions. But I mean, check this out. So if we could pull up the slide, according to Forbes Health, these are the top 2023 New Year's resolutions. Now, you can kind of see most people would anticipate, you know, okay, I want to get in better shape, or, you know, I want to lose weight, I'm going to diet, I'm going to exercise. All those kind of tie together. But what stood out to me the most is the improved mental health.
Yeah.
And you yourself.
Yeah.
I'm reading books,
Sure.
right? Like I'm working on my values factor. You're
Right.
meditating now twice a day.
Yep.
And we are obviously consistent with what's going on in Forbes Health. And I just thought it was really neat that people were, one, admitting it. You know, it's
Especially after the last couple of years,
Oh
right? It's
man,
been tough
it's
on
been
people,
super
you know?
rough, and I think talking about it is the place to start. So it just I couldn't resist putting this up there, because I think most of the time, or if you were to guess, hey, what would be the number one New Year's resolution?
Sure.
It would be probably something to do with weight loss,
Right,
fitness,
right.
diet, exercise,
No smoking,
and
right.
here the number one was improving mental health.
Yeah, and
So
those all lead to helping all these other things, right?
they
You
kind of
know?
do all
You know?
tie
Yeah.
together, which is, you know, I live by AWA. So Avatar 2's out. I don't know if you've seen any of the avatars.
I have. I
Okay,
wanted to
so do
see
you remember
that
the
one.
tree? The
Sure.
tree, it's named AWA, and how everything is connected. And so just like AWA,
Right.
if you can improve mental health, and if you're not taking care of yourself, there's no way you're going to be able to improve any of these things.
100%.
It starts there.
Exactly.
So
Yeah, yeah.
did you take your meds today? Have you meditated, exercised, worked on your diet, and got some
Okay.
sleep?
I thought you were
There's
going to
your
ask me
meds.
something
No,
else. I'm
not
like,
your prescription. No,
How dare you? How dare you bring that up on our
I'm
fourth
sorry.
show?
I apologize.
All right.
All right, NFL.
All right, I was going to talk about Derek Carr and all the shenanigans that are happening with the Raiders, but obviously we know the tragedy that happened on Monday night,
Yeah,
right?
that was terrible.
You know, it's almost crazy that that hasn't happened more, you know what I mean? But it was great to see the country just, you know, get behind this. And,
Yeah.
you know, I think they donated like $9 million already
Yeah.
to his charity. So God bless. Hopefully he pulls through. Obviously his career's over, you know, that's more than football, you know what I mean? But
Yeah,
it's just a
I haven't
tragic
heard the
story.
latest, but I mean, sending thoughts and prayers out to the Bills organization, and you know himself, his family.
Yeah.
It's just
It was really
it was
scary
kind
to
of
see.
eerie to watch.
It was.
And,
To think that his family members were literally watching that
Yeah.
live is just such a hard thing. But let's I know it's supposed to go 2 minutes. Let's go to the next one. All
For
right?
sure.
All right. Game plan to buy. I like
Yeah,
this.
we like this.
Yep.
So, you know, you were mentioning how you're chatting with people on tax returns and getting getting ready to meet with people, and I think it's important that you don't just wake up one day and go, okay, now it's ready to go buy a house. I'm going to get pre-approved, or I'm going to call a real estate agent right now, set me up on a search. Let's go look at houses. Like
Right.
there needs to be some time spent in like, what is the preparation to actually getting ready to buy a home? You don't just go out one day, run once and you're in the marathon on Saturday.
Right, because there's a lot of people that literally, let's get in the car and
Literally.
like, oh, you've been
I'm gonna go look at
pre-approved?
new builds.
Like, I don't need to do that.
I haven't filed taxes in
Right.
5 years,
Yeah,
so
I'm good. I got an 800 credit score. That's
yeah. So I mean, I've come up with, I've seen this. I wanted to make it really, really simple. So something I found, if we could go to the slide, really step one is processing how much you can really afford.
Okay.
Okay, so what are you comfortable with? Not so much on what your
Kind of
debt to
important.
income
Right.
ratio is. Like,
Right.
hey, Nick, Dustin, I want to pay this amount. I want to pay $2,000 a month
Yep.
or $2,500 a month. And then that really allows us to back into, okay, well, what does that look like based on your credit score? So step 2 is preparing your finances. What is your credit score? How does FICO impact the rate that you're going to get? All of these things play into, what the payment is going to be.
100%,
So again,
yep.
kind of like the AWA effect, they're all connected a little bit. We need to make sure you filed your taxes. What are you showing? Hey, you haven't filed just yet. What do I need to claim? What do I need to show to qualify for this much so my payment can be $2,000? And then you got to get pre-approved. And so pre-qual versus pre-approval, we talked about that
Sure.
in our last show, and it must be pre-approved. Then we can actually get in the car
Yep.
and go look at properties.
Wouldn't that be the best way to do it? Like, everything's done and you're ready to go, and it's just, but it's shiny object syndrome, right? We just, let's go look at the house. I don't care, right?
Yeah, a lot of people like to do it backwards or put the cart before the horse. And, I feel like if we don't talk about it and that there is actually a roadmap that's ideal,
Right.
set you up for the best, success.
Sure.
Because by the time you can't unsee a house.
Well, exactly. And when I talk to clients all the time, I ask them, do you have a specific sales price? And they're like, oh yeah, $550, $600. I've been looking at,
Right.
and I'm like,
Right.
well, where do you want your payment? And they're like, $2,500. And that's not going to get you that price.
No,
So it's,
no.
you don't want to go out there and start looking at houses that you maybe you can't afford it, but you don't want to afford.
Yeah,
it,
this
right?
isn't HGTV. We
Right.
start you with the $1 million
Sure.
house, even though you can only afford
Right.
$425.
And that's totally real. Those things, right?
It's real because
Right.
they can't unsee it, and you can't go backwards. So we need to
Yeah.
make sure we do the mathematics first, and then show you appropriately. And if we step you up, then we step you up. But it's really hard to go down.
100%. That's great information. So, all right, man, wrap this up. So, what do we want to see stay this year? We had a lot of cool, funny things. We wanted to go away this year. I was thinking a market where buyers can still buy a house, right? Without all this competition and noise and getting outbid and over ask price. I have a feeling that is going to stay.
I feel similar for sure.
It may not have as much oomph to it towards the end of the year with seller concessions and everything else, but you take the good with the bad. I feel like that is going to stay. What, you as well?
Yeah, no, I completely agree, and I think sooner than later. So if you're wanting those concessions, earlier in the year, you're going to have the highest probability to get that.
Right. And we'd like to see some home equity stay as well.
Yeah,
right?
that would be nice if we could stay flat or slide up. That would be awesome.
We do have an affordability problem.
We do.
So unfortunately, we do kind of need to see sales prices come down, but we don't want to see everybody lose all their equity.
No,
So,
we don't want to see some 20% correction.
Right,
or-
and we obviously don't foresee that with our predictions, but I think we think prices are likely going to come down a little more. In the beginning of the year, and then kind of flatten out, go up, and then flatten out, and here we go.
Plus two. Again, plus two.
If rates can shape up, then affordability will get a lot better.
For sure.
Anything else?
I'm a big. You watch TV?
Sure.
I watch some TV. So there was some pretty epic shows that ended in 2022. That, one for me was Ozark. That was one I watched. I don't know if you've watched it.
I loved it, and then I got out of it. I don't know why.
Dustin. That was one that it's not like Walking Dead. Walking Dead also ended in 2022, but I
love Jason Bateman, and I don't know why. It was one of those I just, and then you stop, and you're like, I don't want to watch the four I saw.
You need to get back on board with that.
Get back on board.
Walking Dead, meh. I mean, I know.
I thought Walking Dead stopped like 5 years ago. and that was an amazing show. Yeah. Like, what happened? Did they finally figure out?
I actually don't know.
I think I want to watch the last show.
Just the last episode.
Just the last episode.
Okay,
like,
so
we
you
finally
skipped 6
figure
years.
This all out? Yeah, I'm gonna,
maybe we do that together. together.
Yeah, let's do that. And then, the McRib's going away, which is a bummer.
Really?
Yeah.
I've had it
and
one
the
time.
Choco Taco. So, every stoner in America is really
Just
bummed
real
about
sad.
that. Yeah, the McRib is, by the way, there's nothing rib about it. Like, I had it when I was like 15.
Ooh,
and when I liked everything at McDonald's, I'm like, I don't like this. It's gross. But I do like seeing every year, the McRib's back. And I just think it's
the
funny.
sign, the marketing. Yeah.
And I'm like,
Interesting.
people still buy the McRib, but apparently not enough to keep it going. But what I feel feeling in like 3 years, they're
going to bring it back. It's going to make a comeback.
It'll go.
Yeah,
It'll go.
it can't
bonkers.
sustain the recession.
The Choco Taco, that's tragedy.
Hurts my heart. I love the Choco Taco.
All right, well,
All right.
enough of that.
Enough.
So, all right, that was an amazing show. So look, prices, again, we don't see the market crashing. It's probably level.
Flat.
Rates are going to
Plus
come
2.
down. They're not going to come screaming down, but they don't go up and down in a straight line. But we'll get there. It's going to be a great year this year.
For sure.
If you're out there looking to buy or sell, how do they get a hold of you, my friend?
Yeah, best way to get a hold of me, Nick Lehman. You can text me or call me, 702-289-5200. Nick@theLehmanGroup.com is my email. Look forward to chatting with everybody and forming a game plan on what works for you.
Awesome.
Dustin, how about you?
Yeah. So there you go. That's I always screw
The
this
PBM,
up. Yep,
yeah.
There it is. Producing branch managers. So that's how you get a hold of me. Guys, thank you so much. I think we've got a pretty cool show coming next week. We're going to go live stream and maybe have some special guests. So can't wait to see you guys. Thanks again.
Absolutely.